Now the purpose of this video is to illustrate what's required to trade through periods of drawdown. Now any experienced trader realizes that drawdowns are inevitable, but I want to approach this from a different perspective in order to alleviate some of the emotional charges commonly associated with trading. But first we need to take a look at the definition of drawdown with respect to investing or trading. Now, drawdown can be referred to as the peak to trough decline during a specific record period of an investment fund or commodity. A drawdown is usually quoted as a percentage between the peak and the trough. So what does this mean? Well, let's take a look at some charts so that it becomes a little more apparent. All right, so here we have a system that shows some trades here. And if we were to start with a new equity high here, and we were to close this trade, this is setting a new equity high, and this is trade close to trade close. This next trade is a losing trade, and so we would officially enter some period of drawdown, but that could not be defined until we make up that loss, because we don't know how far this loss is going to go. So we see there's a couple losses in a row here, but this trade here sets a new equity high. So once this new equity high has been set in a trade close to trade close, then you can determine the depth of this drawdown, whether it's in dollar amounts or percentage. Now there's another type of drawdown that we should probably consider as well, and that's intraday or intra-trade drawdown. So you'll see if you enter a trade here and the equity is rising, you'll see that it peaks up here, but then it draws down before the trade closes. And so in this case, you'll have an intraday or intra-trade drawdown. So that's important to realize too. Okay, so hopefully now we all agree on what drawdown is. Next, we need to take a look at what you should expect with respect to drawdowns in trading. And first, let's take a look at a trading system that covers nearly 8 years of backtest data. Now, taking a look at this equity curve, this is a system that I think most traders would be interested in incorporating in their trading toolbox. It shows a fairly consistent growth in equity over the entire data series. Now, when we look at annual returns here, this also looks fairly consistent. Now 2004 and 2012 are partial years, but these years look fairly consistent, and that looks very good. But when we drill down and go to a shorter time frame, whether it's monthly, weekly, or daily, we can see more and more drawdown here. So let's take a look at another chart so that we can observe this. This zero line is where new equity highs are being set, and that occurs when this white line approaches that $0 drawdown line. Now this is daily drawdown, so at the end of every day, if we're in some degree of drawdown, this will appear red, and as we walk along this zero line, we'll find that the majority of the time we spend in some degree of drawdown. Now, there's nothing wrong with being in a period of drawdown, because it's only normal that a trading system will enter periods of drawdown during the course of its trading history. So rather than get too concerned about drawdown, you want to just monitor the depth of the drawdown and the length of the drawdown. And we can do that by taking a look at this, and this is drawdown depth, and this gives the dollars in drawdown over the course of this trading system. And you'll find that most of the time the drawdown is less than $1,400. And this tends to take on the shape of a bell-shaped curve. When you look at time in drawdown, you want this to be relatively short too, and in this case we see that most of the drawdowns last 20 days or less, and this is also desirable. Now, just to summarize, I just want to point out that it's important to realize that you'll spend the majority of your time in some depth or duration of drawdown. This should be expected, and you should not worry about this. In a future video, we'll explain how to manage drawdown and adjust your trading when these levels have been exceeded. For now, though, just realize that when trading, it's best to keep a longer term focus, generally from month to month or even longer, to keep yourself from making any changes to your trading plan that are not justified. Well, that's it for this video. Thanks so much.